Finally, one more thought. And the winner is Hungary. There's an awful lot of talk these days about inflation, about whether it's coming, about whether it will last, about whether it will get out of control. For those of us old enough to remember the 1980s, it's not surprising that we get nervous about our money growing less and less valuable. After all, some of us actually had mortgages at over 18% interest. And the burden inflation places on savers and those on fixed incomes, and there are more and more of us, is very real. But when it comes to serious inflation, hyperinflation, the United States has never been in the same league as some others. Think about the French Revolution, when inflation reached 143%, and that is a month, not a year. Or the Weimar Republic, when it got up to 29,500% a month. And note that just about every instance of hyperinflation came tied to a war or other armed conflict.
Nearly every time inflation expectations in the UK surged, it was because of a war.
But the top prize goes to Hungary, when, in the aftermath of World War II, the pengo fell by 13.6 quadrillion% every month. Not surprisingly, Hungary decided to ditch that currency altogether and move to the forint. So even as we and the Fed keep an eagle eye on those inflation expectations and the break-evens, we can take some comfort in just how stable our currency really has been, at least so far.